expanding internationally and doing so aggressively, I imagine as a function of the regulatory or tight regulatory body in the United States. Is that what's happening?
Well, Coinbase is based in the U.S., and we're not leaving the U.S. In fact, this is the biggest market for us, and we're the leader in it. But we also want to be an international company that allows us to, help many people around the world benefit from this technology as a way to update the financial system. So actually, we do have a pretty exciting announcement about that. Today, we're announcing that our international exchange got regulatory approval to offer perpetual futures or derivatives trading to retail customers. And we're really excited about that just because it's a way to bring in a whole other set of people around the world, and actually in over 100 countries, who can start to participate in this more open and fair and free financial system.
When you look across the globe, do you say to yourself that other parts of the world are now much more favorable towards crypto? And I know you've made the argument historically that from an American perspective, you don't want to see American companies effectively move abroad.
Yeah, unfortunately, I would have to agree with that at this point, the U.S. is behind, severely behind, actually. So if you look at the other G20 countries, 83% of them now either already have crypto legislation on the books or it's in progress. It's being drafted, implemented. The U.S. is behind here, and we've seen the share of the U.S. job market around crypto shrink from about 40% to now it's about 29%. And it's due to this lack of regulatory clarity. So I think when I speak with members of Congress, I had a great meeting this morning with Nancy Pelosi, for instance, and a number of other meetings later today. The general broad consensus view, it's kind of common sense. It's let's get some clear rules on the books. Let's protect consumers, make sure that kinds of things like FTX can't happen, and then also preserve the innovation potential of this industry.
What's happened with Bitcoin? When Bitcoin was at 60,000, you had a lot of institutions on the sideline who were looking and saying, boy, we'd like to invest. We'd like to allocate 1%, 2%, 3% of our portfolios, pension funds, for example. But at 60,000, it feels toppy. There's some mania. But they've done the diligence. They've met with their investment committees. And so as it went down to 17,000, it wasn't a shock to me that you saw some of those institutions step in for the very first time, buy Bitcoin, store it in their portfolio. So I knew there was a buyer.
But interesting that those institutional buyers stepped in when it was showing its volatility. You would think that the opposite would be true, that they would want to stay away, unless you think now that this is such a critical asset class that no one can afford not to be in it.
Yeah, well, it was a moment of capitulation. So if we could see all the books and records, I think it would be a combination of some really smart Bitcoin whales that have been in it for 10 years, and then fairly quickly some of those institutions stepping in. That's exactly what's happened. I mean, look, in crypto, yes, Bitcoin's up 40%. It doesn't mean it's going to go up another 40%. But in crypto, there's Bitcoin, and then there's literally everything else. Bitcoin is trusted. It's largely censorship resistant. There will only and ever be 21 million Bitcoins. It will have to be a component in a portfolio of broad portfolios, like a pension fund, maybe just to a small extent, but it will have to be there. And then there are all other cryptocurrencies. Ethereum's in a special class, of course, stablecoins, and then everything else looks like a speculative stock. Maybe if you invest in it, you make money. Maybe you lose all of your money.
Bitcoin is the greatest distraction from the greatest disruption that is coming to financial services. I think AI is probably the other big disruption there. But and there's so much noise around a lot of things like FTX and others. But if you bring the technology down to its core value, it does three things. One is it allows a payment mechanism. Number two, it allows smart contracts to be programmed into the token. And three, because it's a general ledger, it has a source of truth. So whoever has that token, all rights in that token are granted to that person. So if I sell it to Frank, I don't have to go through a third party to do it. Frank gets it, and Frank gets all the rights. So my favorite example is Rihanna, who came out with, right before the Super Bowl, and I know she's just testing the market in this, 300 NFTs, each one worth 0.00033% royalties on one of her biggest songs. Well, why can she do that? She can do it because when Spotify plays a Rihanna song, it can capture, the smart contract executes and says, I owe royalties here. And so nobody has to be involved in it. And it can take the fractional payment and go to, because Frank's a big Rihanna fan, so it goes to his account, and he owns a couple of those. and he's paid, right? So now think about any way in which you have revenue streams or royalty streams that you can now start to fractionalize that or democratize that and think about how that is an uncorrelated asset to all the traditional assets. So other examples is, I think that athletes are they'll sign a big contract, they'll say to their fans, I'm going to sell off, tokens worth 10% of my future revenue stream, I'm going to, 100,000 tokens, and boom, the fans are going to probably pay a premium for it. So it will be a way, and if you think about it, it's just securitization done on steroids. And it's merely that this technology is enabling it, and it's also enabling other very interesting companies that will disrupt some of the traditional business models that we have today.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel. Support this great content by hitting the Cash App and by joining the Patreon.
And we have Brian Armstrong on U.S. regulation. And guys, we know why we're behind. We're behind on purpose because they want the emerging markets to rise. And Brian Armstrong admits he wants to be an international company because we know crypto is global. And we had Bitcoin get its legs during the 2008 banking crisis. And we know the Fed was 100% behind it. They wanted everything to be tokenized and put on blockchain because that would give them total control. And we see AI, the robots, algorithms, and drone rising. So therefore, it can take over the economy. And we have Ray Dalio telling us a debt crisis is coming. Don't forget the NWO causes the problem, wait for the reaction, and run in with the solution. They know these high rates for longer is destroying this economy. And they keep saying the consumer is strong, when we know the average person doesn't even have $400 in the savings. But they're going to run this legacy market in the ground. And then, guys, we're going to go through hyper deflation. And they're going to pass out that free money. But little do the people know it's going to be programmable. Being able to tell you what, when, and how to buy. And you have 3 to 6 months to spend it or poof, it's gone. And the machines will take over the economy to increase productivity. And we know the sheep are going inside the metaverse. I know it sounds like a movie, but remember, your life is an illusion. And TV is your reality. And then we have the government shutdown looming. And guys, we know this is nothing but a movie. So basically you have to sit back, get your popcorn, and let it play out. I don't see the government shutting down, but if they do, it'll be a short period. What's hurting the economy right now is the auto workers strike. And a lot of attention has been moved away from them, but it's going to hurt the economy nationwide. And guys, we know they do not want you to have your own personal vehicles. These 15-minute cities, we already know the agenda. But the masses are asleep. And we know by the time they wake up, the fourth industrial revolution will be here. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
It's also happening in an interesting time for our economy. We're coming out of COVID. We're facing these higher rates and some of these debt problems. Do you think, Ray, we're going into recession?
I think you're going to get a meaningful slowing of the economy so that you come to something like zero interest rates, a zero growth rate, plus or minus like 1 or 2%, if we don't have the supply-demand problem with treasuries. If you have the supply-demand problem with treasuries, you're going to see a whole different dynamic, and I'll tell you what it will look like.
A bad one.
It's a bad one because then when there's not enough demand to deal with the supply, you also can have selling of treasuries. There's $31 trillion of treasuries, and if those want to sell, then the supply-demand imbalance can become very large. And when you have a very large supply-demand balance, it puts the central bank in a very difficult position because it means interest rates have got to go up a lot to ration that. And the way that happens, when interest rates go up, it curtails capital formation. A lot of higher interest rates means because of that supply-demand, something's got to give, and new capital creation and new borrowing doesn't, and you have a contraction. That will force the central bank into the position of thinking, do I have to come in there and buy again? And if they go and buy again, then that'll have it'll depreciate the value of money. So that trade-off becomes more difficult. The more debt you have, the more more difficult it is for the trade-off. Because you have to think about it. One man's debts are another man's assets. So if you don't have interest rates high enough that the creditor gets a good return, but have them not so high that the debtor gets in trouble, which that balancing act is very difficult when you have a lot of debt, then you're going to have a problem. And we're getting closer and closer to that type of problem. So I think it very much depends on the supply-demand condition for the Treasury market.
You won't give me odds on whether we shut down, I guess. I mean, people are at like 80% now, Mr. Speaker. 80%.
I understand you want markets to roll and do whatever you can.
If I was on DraftKings, if I was on DraftKings, where should I put my money for the whether the government shuts or not? I'm leaning toward. I don't think the odds will be very. I won't make any. Go ahead.
I wake up every day optimistic. I'd say put your money on me. We're going to get this done. Now,
well, I'm not counting you out. That's one thing people say. That's one thing people say. Don't count you out. But I'm just talking about whether you're able to wrangle those crazy cats on both. Crazy cats. That sounds like a beatnik. But those crazy wrangling cats that you're trying to accomplish. What are the chances that finally happens? I don't know.
If you want to do it by a clock, I don't know what to give you the odds on a clock. But if you want to gauge at the end of the day, do we get this done? The answer is yes. We will get this done, and we will be better and stronger for it. But I don't give up if the clock runs out. I'm okay playing in overtime.
I know you did. Yeah, you played. You had, what was that? What do you call that? 15 innings or your speakership? That was 15.
Look, I'm Irish. I don't care if you have to fight. I'll go 15 rounds.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Crypto Teacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.